Okay, good morning. Stocks go up, stocks go down. Then we see. End of year coming. Does NVIDIA get through 500? Maybe 503, 509, 522. Don't know. Does SMCI get through 303? Tesla's trying to run 266, 272. They're going to have news over the weekend. So does it run? What happens on Tuesday? Don't know. MicroStrategy, huge move, but it's back down today, a little bit lower. It was all the way up near 700 yesterday, last night. AMD trying to break up. Tech's a little bit better. ADI is the big news. Analog Devices is going to raise prices. And you remember the Xilinx merger with AMD and all that stuff. So Xilinx competes with AMD and competes with ADI. So ADI is raising prices. So that tells you AMD will raise prices. Very interesting, right? So keep an eye on that. Chips are going to move. The chips look great into next year. How far do they go? I think they go a long way. People still scared of, NVIDIA going to lose all this business to all these other ones, Intel and all that. Maybe not. Let's see what happens. Today it's got a chance at back this 500. If it takes out 503 and closes, they're going to run it. Okay? They're going to run it. And that's what we know. Nothing else really happening. Apple, back positive. They got to stay on their one order where they can't sell watches, so they got to stay. So that's positive. Don't really see anything else. Rates continue to go lower. So remember, I told you something that's going to happen, and it's happening. And everybody on Wall Street, they're just blithering idiots. 90% of them blithering idiots. They don't understand the basics of life, okay? So I'm going to go over it again here. So let's say you have $1 million or $20 million, two numbers, and you get 5%. At 5% interest, you go to $20 million, and you get $1 million a year. At $1 million, you get $50,000 a year, okay? Okay, so let's say there's a lot of these people that have $20 million. Okay, guys, don't disillusion yourself. All these people, there's so many people that have 10, 20, 30 million. You can't imagine. Okay, so for all these years they got 0%, or they put their thing somewhere and they got 1% in a CD on 10 million or whatever. All the pension funds told you they're struggling to pay all their pensions, and they're all in trouble because they need 3% to pay all the pensions. Okay? All the pension funds need 3%. So they would have to invest it, and they would have risk. Okay? So it goes to 3%, 4%. Okay? Now let's go back to way back in the 70s and 80s when rates were at 6%, 7%, 8%, 9%, 13%. So my dad bought 10-year bonds at 13%. And he got paid for 13 years, 10%. And then when they came due, I don't know, it was like 8%. And he said, well, I get 13, I'm going to wait. And then it went to 7. Then it went to 6. Then it went to 5. Then it went to 4. Then went to 3, went to 2, went to 1. And he never got 13% again. He never even got 8% again. He never even got 5% again. So now you take that to now, you're at 5%, and then at 4.8, you get a shit bond auction because all the people are just dumb. They're greedy, dumb people. All the funds are dumb. The banks are dumb. Everybody that manages your money is dumb. I'm telling you. They don't want 5%. So then it goes to 4.8. Then it goes to 4.3. Now it's 3.8. And they have a bond auction yesterday that was off the radar. Everybody and their mother is saying, get me bonds. I don't care if it's 3%, 3.5%, 4%. Just get me in. I don't want 0, or I don't want 2% next year, because that's where it's going to go. It's going to go to 2%. And then you're going to get something like, oh, a pension fund is going to fail because these blithering idiots didn't take 5%. And they can't pay their pension. They're like, oh my God, we're going to have a problem. They have to take bond rates up. No, they don't. You can go out there today and get 3.5 and be happy. People are never happy. They just gripe. Okay? So what are the smart people doing? All the smart people, I know at least 5 people that put $20 million or more at 5%. That's $1 million interest. And 2 of them called in the last 2 days and said, this is funny, Sam. I mean, it's going to go to 2%, and I'm going to be sitting for 10 years at 5%. Exactly. So as the rates come lower, all these guys are saying there's going to be nobody to buy the bonds. There's going to be more people to buy the bonds. They don't have a clue. They don't understand economics. They need to burn all the books. They need to burn every economic book there is. And if they did that, people would be smarter. Because then you have to rewrite it. And they're going to say, oh, wait a second. If it's at 5% and it's not going to go to 6%, or it's going to go to 2%, what are you going to do? Do you want 5 or do you want 2? And that's what's going to happen. I mean, think about the clowns out there talking about oil. You have all these issues with oil. It's trying to get through 90. It can't get through 90, and it goes to 70. And you got people saying, oh, it's going to go back to 90. Who cares if it goes to 75? They're like, oh, if oil goes up $4, huge inflation. Who cares? It was at 90. In Dallas, gas is almost under $3 again. For premium. Think about that. From $4.50 to $3. Who cares if it goes to $3.30? See, this is why people lose money. They haven't learned the basics. If you have $1 million, and I understand you're trading and you have an extra $1 million that right now you have it wherever you have it. You say, oh, I can go get 4%. Let me just put it at 4% for 3 years. Be happy. That's $120,000 in 3 years. What's wrong with that? You don't need to wait for 5 or 6 or 7 or 8. At some point, you got to be happy. And that's what these people are not. And these are the same people that are telling you that a crash is coming. Why would the market drop? You have to give me a reason. Oh, all the commercial real estate won't be redone. They'll be redone. They're all going to be redone. I mean, and in an election year, 95% chance the market goes up. It just does. Go look. And go look at the last 50 years. How many elections are that? 50 years, 4 years, so 15 elections. Say 50, 60 years. Let's use 60 years. It's been down twice. So you're going to tell me this recession and this yield curve? Yield curve, worthless. Worthless. It doesn't work. Oh, we're going to get a recession in 3 months. Oh, now it's 6 months. Now we get one in 12 months. Now we get one in 18 months. Oh, now we get one in 24 months. This is what the books tell you. Burn the books. Unless every parameter is the same. If you have, let's say, 5 different parameters. So for you guys that know programming. Variable X, Y, Z, ABC. You have 6 variables. If you're going to go compare something, the 6 variables need to be the same. They can't be different. If they're different, your comparison doesn't work. Okay? So that's what's going on. So the next bond yield is going to be even better. That means the rates are going to go even lower. They got 7 or 8 rate cuts for the Fed now. Because here's the reality of the situation. If there's no inflation, there's no reason to keep the rates up. Why would you keep the rates up here just for no reason? Oh, because we have inflation. They're just making stuff up. Okay? That's what we got. Okay? Good morning, everybody. I hope you like that rant. How's that rant? Pretty good. SPX doing nothing. It's up 1. 47.82, 47.91, 47.93. If it takes out 4,800, 4,818 possible. But here's what's happening. Every time we get near 4,800, everybody's selling, and they're buying puts. And then we reverse. We go from up 5 or 6 or 7 to down 5 or 6 or 7. And if you buy puts, you can make some money, and you got to get out. If you don't get out, you can get beat up. That's it. Nothing's holding. Doesn't mean it doesn't hold today, but it's not holding. Okay? Vago, 1152. It's not moving. It's not moving. It's done. The move is done. Once you move 220 points, it's done. It's not going to move anymore. It may move 20 or 30. It's not moving 100. It will probably never have a 100-point week for the next 6 to 8 months. Never. Never. But he will price the options like it will. Adobe. I keep telling you. 4 to 6 week avoid. NVIDIA. Here we go. We're going to try. Do we try? It needs to get to 504. And then it needs to hold 503 for 15 minutes. And then it needs to break 506 with force. And then it won't stop. If that doesn't happen, and it goes to 503 and then breaks 500, just like at 493, everybody and their mother can short the stock and take it way lower with a 503 stop to the upside. So your risk to the upside would be 3 or 4 or 5, and downside all the way back to 482. Unless it gets through and holds. Lam Research, 801, 811. Apple, 196. Lilly, nice day yesterday, 586. AMD, 148, 152. Very interesting with AMD because here's the thing people not tell you. Nobody's telling you. Not one person on Twitter even knows this because they're lazy and they just copy me. And I haven't put it out there yet. They're just notoriously lazy. AMD bought Xilinx. Xilinx is ADI's biggest competitor. ADI, Advanced Analog Devices, I know semiconductors, guys. Okay? I worked Texas Instruments 20 years. Okay? So, Xilinx, if Analog Devices tell you they're going to raise prices on everything in February, that means Xilinx is going to raise prices on everything. Well, if Xilinx is going to raise prices and AMD owns them, they're going to guide up. Interesting, right? You learned something. MicroStrategy, 682. Coin, 188, 196. BKNG, I think this goes to 3,800 at earnings. Netflix, 503. Afram, 52.56. Goldman Sachs, 388, 392. Boeing, 266. Beast, UPST, 51. Caterpillar, 301, 306. SMCI, 303, 316. Microsoft, got to upgrade to 450. 381 very hard. NOW, 711 very hard. Tesla, can it get through 266 and run? That's what we know. Hope you like the rant. Everybody have a great train day. See you in chat. Hope you learned something. See ya. Thanks.